So from what I'm hearing from backstage, we've got a couple of panelists who haven't joined us yet. But before I begin, I realized that this is not necessarily a problem because last night during the networking event, where some of you were here and some of you unfortunately did not attend, we realized that we have a really cool asset in this room, which is a room full of very smart people. So if anyone wants to intervene at any point in time, if they feel like they can bring onto the conversation, I really have no problem at all. Raise your hands, speak up, and we can make this more of a dynamic thing. So the topic of this morning is blockchain, and I really hope that that this is a technology that's going to kind of lighten the room up a little bit, a technology to help us start this this morning. And it's a technology that we're speaking about because no matter how the market that it created looks like right now, no matter what it looks like, no matter how crazy it might look like, this technology has brought about a very fundamental and important paradigm shift, which is the capacity to move actual value online on the internet in a very, very simple way. And obviously, this poses a very interesting question for banking. So, the first thing we're going to do is we're going to go around the room of panelists and introduce ourselves. So, Cornel, why don't you go ahead?
Thank you for the invitation. I'm a technologist. I'm a business architect.
You should have the microphone.
And like this. Thank you. And for sure that blockchain is the major technological trend we have to follow from the last 10 years ago. And now we are seeing that this technology will transform dramatically, will disrupt, this is the right term, all the business model existing in the actual world. For this reason, to check deeply what blockchain technology means and how this technology will impact the future business model, this is one of my favorite themes. And because I was involved in the last 6 years in designing and developing a low-code platform, which is another emergent technology, we consider that this combination will deliver very fast a lot of new prototype, a lot of new software application. And the outcome I see here, and banking industry is going exactly in the same direction, is that we will move out from the enterprise paradigm and we will start to talk more and more about platformification, about platform business. And banking is going exactly in this direction. The border of a bank will disappear. And for this reason, I can recap one of the conclusions that fintech and banking will coexist for the future.
Very, very nice. So Cornel is operating right now a low-code platform which also allows you to build blockchain solutions. Am I right?
Yes, yes. We are one of the, let's say, few platforms able to generate not the other, let's say, part of the source code necessarily for an end-to-end application, for a complex application, but equally, we started from the beginning to think a smart contract designer and to different, let's say, stencils to, let's say, to be able to be blockchain agnostic. We have to consider that blockchain movement is at the beginning, and as we saw this year, a lot of new project, a blockchain project was a peer, performing very fast. I'll be happy to mention also Elrond, which is a Romanian achievement, and also their performance is huge.
Great, fantastic. And I see that now we have a new panelist among us. Alessandro, welcome. Welcome to the conversation. Can you hear us?
Yeah, I can hear you well. Welcome, everybody. Thank you for the invitation and the opportunity to represent SIA Group here today with you.
I think it's very important for you to speak up a little bit and try to speak a little bit more into your microphone because we've got a really, really big audience here and a big room.
Okay.
So try to fill it up. And I'll give you a couple of minutes to introduce yourself.
Okay. Good morning, everyone. My name is Alessandro Agnoletti, and I'm the Head of Innovation at SIA Group. Thanks for the invitation. I'm glad to represent my company here today with you and to talk about this interesting topic that is around blockchain. My role in SIA is focused on the constant repositioning of the SIA Group through impactful, sustainable, and inclusive innovation initiatives in synergy, of course, with the group's strategy and the market needs.
Okay, thank you. Please keep in mind over the course of this panel that it is very important to speak up. But thank you very much for that. Okay, so I think the way I kind of wanted to shape this conversation, and indeed I would have had a few more panelists when I designed this, is that I wanted to make the introduction a little bit about defining what's different segments of banking, and this is a question I had specifically arranged for Alessandro. What different areas of banking exist in terms of what is interesting for blockchain. I think a common mistake that is made in, let's say, Vox Populi is that blockchain is considered to be a technology that can have an impact on the entire banking industry. I believe that's not necessarily the case, so I would like to see if we can fragment it up a little bit into certain sub-niches of banking that could be more specific topics of interest. Alessandro, do you think you can help us do that?
I'll try, of course. What we believe is that blockchain is best valued when shared at all stages of a bank process value chain. And even more importantly, when it involves and aggregates the entire banking system, and not when it's limited to use by a single bank. In fact, blockchain has value if it includes a community that shares, among others, value, information, processes. Additional key elements to be considered are the reliability, security, and compliance that the blockchain network must guarantee to the banking system, making private and permissioned blockchain projects prevailing today. A very interesting case is the Spunta project that has been promoted by ABI with the technical support of SIA and other primary partners. As soon as Romano will join us, I'm sure he will deep dive on this interesting Spunta project. So for us, it has to be seen from a systemic view instead of like a single pillar within the banking system.
Okay, would you like to add anything?
In my opinion,
hold the microphone.
The platformification of the banking industry, in fact, if we think a little bit deeply, banking is just for facilitating business. Banking can be like activity can be integrated and spread it in a lot of, let's say, different business models. And my favorite business model, and I suppose that everybody will agree that the major economical activity in the world is trading. The yearly trading volume is 7,000 trillions US dollar, okay? And this all volume, this is the classical trade. This volume should be transformed in the next years, 10, 5, 25, I don't know. But let's imagine a funnel with 7,000 trillion transforming in digital transaction, okay? And for digitalization of this transaction, we need blockchain. And also for facilitating this transaction, we need banks to clear out all this, let's say, transaction. And this is my, let's say, holistic view when I'm thinking about the future of the banking.
I think this future of the banking statement allows us to segue into the next part of this conversation. And given again the current situation with the two lacking panelists and Alessandro, keeping in mind that we actually cannot hear you very well, so if you would try to speak up a bit more, I know it would seem more ridiculous. One more thing that I am going to do is I am going to make this next question an open question to anyone who also wants to join from the public. I think it's a question that really opens up the conversation and the debate, specifically in an industry such as this one, regarding how this technology is perceived. And the question is going to be the following. What do you think is going to be the net outcome of the impact of blockchain into the banking world? And I think there are kind of three layers you can take to this answer. Layer number one is the blockchain industry will completely come and eradicate the traditional banking industry and replace it. Let that settle in. Okay, the second part of the second sort of answer is they will be complementary and they will help each other out. And the third part is there is a chance that this technology will disappear forever because it's just a hype right now and there will be no, it will not be able to prove that it can add the value it's promising to add. And I would like to hear what your guys' answers are and why you think that is. And if anyone from the audience would like to also join and give an answer to this question, I would very much appreciate it and buy you lunch at the free lunch. Cornel, let's start with you.
Okay, my view, it's a little bit different because we need to redefine a little bit the blockchain. What means blockchain technology in the, let's say, holistic view of the new, let's say, system architecture? In my opinion, I have a, let's say, my own definition. Okay, and this definition is blockchain is the perfect environment for hosting the future artificial intelligence. Because the structure of a perfect repository, blockchain can host via, let's say, smart contract, the future of the business logic, and this future of the business logic will follow, let's say, the organic intelligence architecture. And if you add the new power of the computation technologies near to the scientific computers, add quantum computers and neuromorphic computers, you will see the future of this, let's say, platforms and the brain of these platforms. And without blockchain, in my opinion, that one of the three alternatives doesn't exist. Blockchain is not a hype. The blockchain will remain like the main architecture for the future artificial intelligence, and for sure that for facilitating the trading banking, banks started already, and I can, for example, I can mention some experience from Switzerland. The banks are already very well prepared, and they step very deeply forward to remain the main player in these future transformations.
Okay, thank you very much. Alessandro, would you like to go next?
Yeah, I hope you can hear me well. I cannot do more than that. Let me take it from a different angle. We believe that blockchain is a technology at the service of processes and not vice versa. And we do not believe that it will replace the existing players. It's not sufficient to create service model of banking without banks. In the future, there could instead be banking service models flanking the existing players. But this scenario, which could fall into decentralized finance, DeFi, we do not believe to be possible, at least in the short and medium term, in particular due to the absence of solid models that provide adequate guarantees. But the regulated decentralized finance might be a compromise to look at in the next future.
Yes, perfect. All right. Did anyone from the audience also want to jump onto this conversation? I'm going to sit here in silence for like 30 seconds and let you feel the fact that you're not joining in. No, I'm kidding. Okay. We can move on, but Alessandra, I wanted to ask you something about what you just said at the beginning. There was one word that I did not hear, which is you said that blockchain will come at the service of something.
Sorry?
You said that blockchain will come at the service of something, not the other way around, but I didn't hear what the something was.
Is at the service of processes, of products, not vice versa. So it's
Okay.
not the technology driven, but it's technology that supports.
Okay, okay, very cool. I'll move this conversation to another interesting aspect of what I think blockchain and cryptocurrencies are doing to the banking space. And I think what they're doing is posing a very interesting moral, or no, better put, ethical question. And I think this is a subject that is important for it to be known within the banking industry and actually across the world. And in order to outline this ethical debate, I will put let's say two players side by side, and we can discuss. Everyone in this panel can discuss what they believe are the standpoints on this. So the setup is as follows. The idea of central bank digital currencies is a very popular one amongst lots of people in the blockchain space. The reason why it's very popular is because lots of people in the blockchain space believe that when a central bank will issue its own digital currency, its own cryptocurrency, it will massively help adoption of decentralized technologies. This is quite obvious because when a central bank issues a digital currency, we will literally be forced to use it. So adoption is 100% imposed by law, which is fine. Now, on the other side of the conversation, there are Bitcoin maximalists, for instance, who believe that CBDCs pose a threat because they allow banks and implicitly other entities of power, so to speak, to potentially track the way we spend our money or be able to stop us from spending our money and so on and so forth. So we've got two opposite sides of the spectrum of this ethical debate, and I'm curious simply what your thoughts are on it. I think we'll go in the same order.
Okay. For answering to this question, my opinion is that we have to, let's say, to think a little bit deeply what means digital asset, okay? And because digital asset is a very large concept, okay? If we can integrate here even the cryptocurrency, that means tokens necessarily for developer project, for example. Also, we can talk about stable coins, okay, which means to replace the actual currencies, official currency, with tokens, okay, with their digital equivalent, okay. For this reason, it's not necessarily to keep on separate streams these areas, because if we integrate all in this digital asset concept, okay, we should start to think about transaction between different digital assets. Okay, in a certain way, we can remake the ancient condition when the natural exchange of the goods was existed. Okay, we can convert different tokens meaning some goods with other tokens meaning other goods, because right now to transact different tokens in the new digital world of trading, it's quite feasible in this moment. Okay, also to offer you one example, I like to mention that this year, starting with February, Switzerland legislate and offer a whole framework, a whole legal framework for digital asset trading. That means there is some countries where they start to not to only to allow, to describe deeply how to start to trade digital assets, and how you will be able to convert the classical assets into digital assets, and to move the new trade at the new level. Okay, and having such as legal framework, okay, you should be encouraged to start to practice, not only to talk about the benefits and this is the real facts. And if we start to follow these facts, we will see that all the, let's say, the commentaries, bad commentaries or malicious commentaries regarding, let's say, blockchain technology is not enough fast, for example. This is one of the barriers, okay? Look at Elrond, 10,000 transactions per second, okay, they can offer. Is not power intensive, okay? That means there is solution for any issue we can claim. And don't forget that blockchain technology is just at the beginning.
Okay, I completely agree. Would you also like to take a shot at this ethical debate, though? Like, where do you stand on the line, and why?
This is another very interesting fact, because blockchain is not meaning only technology and only, let's say, how to facilitate different business activities. For example, blockchain being a distributed technology, in my opinion, it's first time when we can move out the ethics, let's say the rules, from different books and different people interpreting books, okay? We can move out of, let's say, human interpretation and put into the system. And my belief regarding to the artificial intelligence, that the future is human plus machine. And in these new kind of networks, human plus machine networks, okay, will be not more room for, let's say, malicious interpretation or a very subjective interpretation being done by different humans, okay? The future of the ethics is inside of the blockchain, if you ask me, because filtering in a positive way this business logic, we can optimize, and being for sure being supported by artificial intelligence and the new power of computation. The new kind of intelligence, human plus machine intelligence, will be a very, very positive ethic.
Okay, so I think, if you would allow me to sum it up, you're saying that we won't really have, this ethical debate will not really exist in its extremes, because we're going to be able to build an AI that will basically live, let's say, more or less within the confines of a blockchain or of a smart contract, which will be able to basically tell us what is okay and what is not okay to be done, and you say objectively.
Yes, yes.
Okay, okay.
More objective.
Objective. More
and more objective, because let's imagine that we are starting from a point, okay, where the human are the major interpreter, for example, of this ethics, okay? What is the constitution of a country? Okay, it's a book, okay? How different, let's say, system are interpreting the same book, okay, is very different, okay? I can give you a lot of examples. But if we start to interpret a book and we, let's say, start to collect in a repository this sort of interpretation, and we will filter out a lot of, let's say, very subjective way to interpret, and will remain just a thin layer where the human brain should remain the, let's say, the main interpreter. You see that it's a filtering out process, okay? Moving from the actual stage when the human eye interpreting and having this human plus machine, we will move to the big stage where the system will be the major interpreter.
Okay, okay, very nice.
It's,
now,
it's an evolving process.
Okay, okay, very interesting. Alessandro, over to you. You don't need to necessarily tackle this, let's say, general artificial intelligence solution to the ethics problem. We can take a step back into the conversation and look at the, let's say, the more classical ethical debate, because that's a very interesting one in and of itself.
Okay. I'm not sure it's an ethical debate. For me, it's more like practical. Let me start that. Given that the central bank digital currency is expected to be a payment instrument guaranteed by a central bank that therefore risk-free, the Bitcoin is not guaranteed speculative assets. So they are two different things to me, which could and might coexist in the future. It is not excluded that between these two extremes there will be a series of payment instruments not guaranteed but regulated. For instance, the stable coins, securities. So it's more up to the banking system to create the conditions for interoperability, guaranteeing consumers and all actors involved in the process.
Okay. Quick question to the organizers. Did Giorgio also jump on the call, or did he jump back out, or what's going on?
There is also Romano Stasi that is trying to connect.
Yeah, we'd be more than happy to have him on board. What can I say?
Yeah. No. Yes.
Wait,
So
watch this.
wait
I will scare the organizers. Sergio. Hello. Do we know anything about Giorgio and Romano? Okay, they're still trying to.
Romano is on the other platform.
Romano is on the other platform.
Yeah.
What other platform?
Brella.whereby.com.
Okay, so let's do this. There's still a bit of time left on this panel. Can someone from the... I think I'll do it again. Sergio. I'm sorry, I'm such a kid. Sergio. Can someone please call Romano, like call him on the phone and ask him to connect to specifically this platform? Apparently he's trying to connect to something else. Okay, thank you very much. Now, in the meanwhile, Alessandro, I'd really like to be able to hear your thoughts in terms of, look, whenever anyone is invited to a panel on a specific topic, there's always something that deep down they feel like they want to say. Now, we didn't really get a chance to connect that much before this panel. So a really simple, open and blunt question to you. Would you like to deliver a message to this audience, anything in particular? And if so, I could help you try to get it across, because the audio really is kind of bad. It's not from you necessarily. It might be from the echo in the room. But I will try to interpret what you might like to say to us while we wait for the other speakers. It can be something about what you're currently working on in the blockchain space, for instance. I think that would be one of the most interesting things.
I had some issues to like the connection was interrupted, so I didn't hear your question. So you were interpreting my words?
No, I said that. I said that if you would like to tell the audience what you're working on right now in the blockchain space, or what's interesting for you and your company in the blockchain space, I can try to help you get the message across because of the audio connection.
Okay. Actually, we are really involved into the blockchain space. We have initiatives at different levels of maturity, from like running projects like this Punta project together with ABI, and I hope Romano Stasi will join us to contribute because it's really interesting. Some initiatives that are in the pre-productions and some others that are under evaluation. We like our engine is the SIA chain, that is a blockchain platform, is one of the biggest, at least at European level, in the banking industry. So it's becoming a standard in Italy, and we will see about the European level. We are strongly committed in developing initiatives that are systemic. So we tend to involve as many actors as possible, consistent with this specific initiative, because as I said at the beginning, we don't believe that blockchain might be sustainable and used if just one actor or like a limited number of players are involved. We are more on the permissioned and private chain because of the clients we serve that are primarily the banks. So yes, like I can't jump into specific projects, but this is how we are positioned. We have also created the SIA Chain Studio, that is a simplified version of our blockchain platform for fintechs to allow also new players to be included in the opportunities that blockchain can allow to the can allow in general. So we are always more open to experiment new business models, new processes, of course, in constant talk with the institutions, because we believe that we have to start from there. We are a markets player, but we cannot like move without being aligned with the institutions and the ones guaranteeing what's happening on the chain we have developed and we are scaling at European level. So this is our macro commitment in the space.
Okay, thank you. That was actually quite decent to hear. Oh my God, a question. Hello, welcome. Hi.
I have a question for Neil, because I noticed that he's more technology oriented.
Thank you very much.
This COP26 event where we talked a lot about sustainability.
I'll repeat her question. Don't worry.
Okay, please, because I don't hear very well.
About sustainability and environment. And another thing that I want to bring into discussion is that blockchain is the technology behind Bitcoin.
Yep.
But I'm not sure that if the energy consumption that we use in blockchain enterprise is similar with energy consumption used for Bitcoin mining. And if it's similar, once the blockchains get lifted, would this impact the energy consumption overall and the sustainability and the environmental?
Okay, so for the people in the audience, this was basically a green hat sort of question, which was regarding the famous energy problem that Bitcoin as a blockchain poses. And the question was, if we scale blockchains in terms of mining and the energy consumptions, what is the basically what's the impact this is going to have?
But also from curiosity, I wanted to understand. So for me, if blockchain using for enterprises is energy consumption is the same as Bitcoin mining, because I think
So an add-on to this question is if enterprises using blockchain sort of uses the same high level of energy as let's say the retail consumption of blockchain. Okay.
I get the question. Okay. For sure that there is a big difference between Bitcoin technology and many other blockchain initiative. For example, look at Elrond. Elrond is a blockchain for business. Okay, blockchain for business means a huge number of transactions per second. Okay, 10,000. It's immense for the business needs. Also, with a very small consumption. Okay, and Bitcoin will remain a very special project. Why? Because when Bitcoin was designed with the purpose to avoid the 51 hack attack. For this reason, the consumption is so huge. Because, for example, I don't know if you know this number, but okay, for organizing a 51 hack attack which can, let's say, corrupt Bitcoin, you need a budget, 500 billion budget. 450 means you need processor power of computation, and 50 billion, only 50 billion, imagine that you have to find power of 50 billion for 10 minutes to organize this. Okay, that Bitcoin, it's architect in this way because it's safe, and also Bitcoin incorporate all this power of computation and power inside of the value. It's exactly, you spend energy to mine the gold, yes? You spend energy to mine the Bitcoin, it's the same. For this reason, this kind of, let's say, cryptocurrency for storage, for, let's say, it's a different kind of asset we can create using blockchain technology. But the same blockchain technology we can use very easily and with a big benefit for doing business. And as I will repeat what I say before, that we are, from the business model's perspective, we are moving out from the enterprise paradigm. Okay, enterprise means, okay, you have a juridical person, you have a fence, and after that you start to develop spaghetti, business to business relationship, okay? Right now we are absorbing all this relationship in what we mean platform business, okay? That means the enterprise border doesn't exist because we are moving inside of an ecosystem. This is our natural organization, okay? And business will happen inside of one ecosystem, okay? And blockchain can help, and we can prove right now because if we come what we achieved in the last years, okay, we can prove that platformification is a fact, and we have the technology for delivering a platform, hosting all the actors inside necessarily. For example, and in my opinion, for example, there is 4 types of platform. The trading platform is an aggregation platform. And trading without banking, this is my, when I say that banking is necessary, banking started already to prepare themselves to be part of this platform, okay? And sometimes the banking, because they facilitate the trading, mainly the digital asset trading, letter of credit, letter of guarantee, other banking product, for example, will help the development of these platform businesses. Okay?
Can I jump into this question really quick?
We have new.
Yes, I saw. Romano, thank you so much for joining. It's very nice to have you on board. I'll finish answering this question and then we'll get to a short introduction of you. No worries, everything's fine. We've dealt with the fact that that people have been popping on and off. We'll be with you in a minute. I really felt like the ProTV guys, you know. Anyway, so a really, I think, important aspect of your question, and actually the answer to it, is a fundamental understanding of how a blockchain works. The reason why we love this concept of decentralization, as, let's say, as blockchain enthusiasts, is because it's a very secure means of proving something. You really you take no risks once every person in the world operates a miner and all of the miners vote on the transactions and all of the miners agree. You cannot get safer than this. Like, what could possibly be safer than this, right? So for a blockchain like Bitcoin, they really wanted to go to the extreme, which is something that Cornel touched upon. But one thing of understanding, it's important to understand why this energy consumption exists. In order to decentralize something to the extreme, right? So to get to the point in which, let's say, every individual on the planet has a computer that is mining Bitcoin and therefore processing transactions. What needs to happen is we reach an impediment of physics, Einstein. Because what we need to do is we need to transfer information from one computer to the other and get each computer's opinions, and we have a limit in terms of the speed of light and how fast it can travel around the world in terms of getting these votes. But the beauty of it is that not every system you design or need to design needs to have this level of decentralization. And what some super smart minds are doing right now, for instance, Vitalik, who's the founder of Ethereum, he's working on, and the entire Ethereum community, for instance, are working on second layer type solutions. And what this means is something, the principle is very basic but very important to understand because it's very useful to be applied in actual technologies and products. What this means is saying, okay, we have, for instance, a small trading market, right? Where people make small trades, let's say below $50. We don't necessarily need to make sure that every single transaction is completely processed by the entire network the second it happens. So what we do is we create what's called a side chain or a second layer solution in which we process all of these smaller transactions much, much quicker. But the principle of how blockchain works in terms of being able to tie a hash function to a set of transactions to make sure that they're never changed can still apply even to groups of transactions, not necessarily to single transactions alone. So what we do is a concept that's called rollups, which is we take the transactions that were processed by a sidechain, we take, I don't know, 100 transactions that were done during a day, and at the end of the day, we put them into one major transaction and we sync that with the entire blockchain. The algorithms that we define for doing this process more and more efficiently and more correctly, while also keeping in mind the protection and the hedge from something like a 51% attack, is what the biggest and brightest minds in blockchain are working on right now, and is what will take us directly to blockchains being much more efficient from an energy standpoint. Who's doing this? Is it me? So it will make it much more efficient from a technology, from a consumption standpoint, be it enterprise or not. The same principles apply. Thank you very much. Is this me? Am I doing this? Are you calling the microphone? Okay, cool. All right. So, ladies and gentlemen, a person with whom I've managed to speak over the phone for a couple of times over the last couple of days, preparing for this panel. Romano, please welcome Romano among us. Thank you very much for joining. We'll give you a crash course into this panel. One thing you have to be very careful of, please try to speak as loud and as clearly as possible because we have a big room here, okay? So keep that in mind. And why don't you start by telling us who you are and what you do?
Oh, thank you very much. I'm sorry for the delay. I got technical problem connecting to this conference. So thank you for inviting me. I'm Romano Stasi. I'm a managing director of Abilab. Abilab is a research and innovation center promoted by the Italian Banking Association. It's a no-profit organization in which 120 banks work together with 70 ICT innovation partners. So we decided in 2017 to start up a project to innovate the Italian banking sector with a distributed ledger technology. So now we have up and running an application using the DLT that is used by 100 different banks. So this is something different maybe to the technologies you are referring when you talk about, for example, energy consumption. We don't have any problem with energy consumption using the distributed ledger technology. A distributed ledger technology is just a distributed application able to register in a ledger the information needed by the user, and the contracts are related to the agreement that every single bank or node need to do with the other player. So the application we have developed is it's about the reconciliation of bilateral accounts, a sort of nostro and vostro account. Is a process generally run by back offices which aim to clear every mismatch in double entry with bookkeeping. So it's a way to reconciliate payments that are not reconciliated automatically by the system. It's an interbank process. So we are in the middle between banks and we collect data from every bank. Every bank owns his own node. So they are able to see what is needed of the data coming from the other banks. So it's a very innovative solution. We are able now to manage a volume of 450 million of transaction. We have already in the register in the ledger, on the ledger, something like more than 4 terabytes of data, and we have in place something like 600 different peer-to-peer relation between banks. So every bank is able to exchange data with other 6 banks at least on average. And so this is the architecture we have in place now in Italy, and we are looking forward to put in place new use cases in the banking sector using the same technology. So this is the status of the art of the use of the DLT in Italy.
Okay, that's very nice. Thank you much for the intro. So you said you've been operating this project since 2017. I'll just give a short recap. Romana has been working on a project in which you got together something like 120 banks. That's what you said?
Right now, 100 banks are operational on this technology. So, okay. Yeah, more than 600 users every day use this application to check not reconciliated transaction, and so this is the situation right now. Yes.
So okay, so in short terms and in layman's terms, you basically built a private blockchain that you operate within these banks. And each of the banks is running a node, which allows for transparency and immediacy of information with everyone involved. Okay, and is it also, you said you're using it for remittance, or did I hear that wrong? Remittance between banks?
Not exactly remittance is more a reconciliation. So we have a transaction that should be mismatched, and we automatically match not reconciliated operation through and within the DLT with smart contracts, rules that apply to every data register on the DLT. So this is the innovation.
Okay, cool. All right, so as we go in towards the final, let's say, 10 to 15 minutes of this panel, do we still not have a George from Modex? Still no George from Modex? Okay, no George from Modex. Forget I said that. We've got 3 people with microphones right now on, and I just did a recap of what, 4, because Alessandro is also still with us. I think, right? Alessandro, are you still with us? Yes, perfect. Okay, so.
Yes, I am.
So we've got now 4 people with us, each of the 2 of them with experience in big banks. And I think, Romano, you were also working together with Alessandro on the project. Or did I hear that wrong from Alessandro?
Yes. I need to underline that we work together with SIA, that is responsible to run the infrastructure. And also we develop the application together with NTT. And the platform that we are using is Corda from the R3, another very important company on the DLT market.
Yes. Okay, cool. And we've also got Cornel, who is running a low-code platform that enables you to also build blockchain-time solutions very quickly. And your beloved host is the founder of a gold-backed cryptocurrency and a precious metals tokenization service, as well as a blockchain development agency that's been working and building, I think, over 30 launched solutions since 2016 until now, including really big exchanges. So what I think would be interesting right now, given that you know this, would be to see if there are any questions from the audience. And keep in mind that I did say we have like 10 minutes left. So if there are no questions, this is going to be very fucking awkward. Guess what? It's going to be very fucking awkward. No, I'm kidding. Come on. Something can appear up here. Is there anyone in this room who has any inclination towards actually using this technology or experimenting with this technology, either from a business standpoint internally or even from a personal standpoint in, I don't know, buying and trading even? Okay, I'll push it further. You're forcing me. Does anyone here own Bitcoin? Who here has some Bitcoin? Raise your hands. What? You have altcoins. I was going to get there. I have 10 minutes left, so I'm just going to take CoinMarketCap by... I have to... Don't ruin my... I need to waste the time here. No, I'm kidding. You don't have Bitcoin? No Bitcoin?
No.
No Bitcoin. Okay.
No, I'm not, because I'm Swiss resident and Switzerland...
they just take it all away.
Yeah, no, it's a very strange situation. And I'm very near to Crypto Valley. I'm part of the Crypto Mountain. There is a very nice initiative in Switzerland. But if my bank, Credit Suisse, for example, discover that I'm touching any cryptocurrency, I will have big trouble with compliance. For example, I start up a new company 2 years ago, and the name of the company is Block Trade Concept. That means the initial is BTC. For sure that Credit Suisse refused to open an account because they believe that this is related to its cryptocurrencies.
Okay, so
and for this reason, also I'm not let's say I'm not a gambler in this moment, but I'm fan of the new technology developed using the cryptocurrency. Cryptocurrency movement, it's a beautiful, it's a wonderful movement, and I appreciate a lot.
I'm not a gambler either. We have a... Go ahead.
I only have one regret in this life is that I didn't start trading like 10 years ago when I first had this opportunity to start. In my personal opinion, from the point of the business and from the point of my own usage of the trading market for cryptocurrencies, is that this is the future because everything is much more safer and it's much more user-friendly through the cryptocurrency because everything is more visible. You can't make certain cuts in the path of the tradings. And as far as, I don't know, safeguarding the future transactions, I think that the cryptocurrencies and the blockchains are for sure the way to go for a healthy and for the sustainable continuing of the trading between different entities and governments, agencies, whatever. So I only have one regret. I should have started this like 10 years ago, but
okay, but
it's not too late, not even now.
Okay, so what are you...
Okay, I agree with your enthusiasm. I'm sure that looking at the DeFi opportunities is interesting. I'm not sure that's not guarantee like opportunities to spread around and dominate is the answer. But not necessarily for you, for me, for people that are educated and are willing to risk, or that accept the challenge and are conscious about what they are doing. But if we look at from a more systemic perspective, looking at all people, I'm sure that we should find a compromise to preserve, like to stimulate inclusion of anyone, but at the same time to lower the risk of people not prepared as you and me and many of people here are.
Okay, so here's another really. Sorry, go ahead. You want to say something? Go ahead.
This is not working. Okay. The thing is that for the moment, the wide public does not have the access to the information yet that's more easy to be delivered in order for somebody to learn how to trade healthy, because we still have some, not we, they still have some flaws within the information that's given back to the public. But through the education of this crypto e-trading, I think that it's going to be more and more appealing to all kinds of people to start believing in this thing, because we need to realize that the world is going forward and that there is a certain progress that's normal to happen. And we have to find a new way of trading that doesn't imply, I don't know, so many papers, so many cash flowing around. It's much more easily to do it the other way around, because this is a transition now, and this is the trade, the current trade that's being followed by everybody around the globe.
Okay.
So it's only a matter of time until people will understand that through education you can find the way how to do this healthily and how you can use this in your own advantage.
Completely agree, completely agree. Now, just the finishing statement, because I don't want people to be screaming at me here, is you said at the beginning of your question, you said that you regret not started trading 10 years ago. Okay, but do you mean trading or just buying and holding? Whatever?
The whole process.
Okay, the whole process. Okay, so I think I'm gonna want to end this panel on a quick short story, and I'm curious if it can come from you. Does anyone in this audience have a story of when they were really close to investing in, let's say, cryptocurrencies a while ago, but you didn't for some reason, or you lost it, or you let it go, and you know now exactly how much money you could have made but didn't, and feel the need to jump off a bridge? No stories like this.
The thing is that I don't want this to become a monologue. I was offered the chance of starting buying Bitcoins because that was the trade 10 years ago. The colleague that encouraged me to do this just asked me to give him 100 euros to buy me some coins. I didn't follow his advice. Now he's a multi-millionaire, a very big one. And my personal reason was that how can I buy something that doesn't exist, that I can't physically touch?
Very nice, very nice.
It was unacceptable at that time, but now I only...
So how much money would have gone in and how much money could have come out?
With 100 euros bought at that time, I would have made like 1 point something million.
There you go, there you go. Cool. All right, thank you very much. Thank you very much for listening to, thank you very much for my fellow panelists for joining. Everyone, I wish you a great day going on.